another corporate conversation lined up. Let's get into an interaction with Mr. Shrikant Velankani, the co-founder and group chief executive and executive vice chairman, and Mr. Pranay Agarwal, the co-founder and CEO at Fractal Analytics. Now, Fractal Analytics, a company that made its D-Street debut earlier today, tepid debut, and the stock continues to be under pressure. But let's get a better outlook from the management themselves. Gentlemen, congratulations on the listing of Fractal Analytics earlier today. Talk to us about what is your outlook on profit margins for the firm following the completion of this IPO.
As you were saying that we already enjoy pretty healthy gross margins. We expect that we'll be able to continue to improve the gross margins as we drive more license-based revenue through Cogentic as well as through the Alpha company. So that's one. And second is that we have invested significantly in our sales infrastructure as well as in the overall administrative and G&A, and those are going to, those are not going to scale with revenue, and so we expect not only gross margins to go, but also EBITDA.
I'd like to also add that we look at something called as the adjusted EBITDA. Our adjusted EBITDA is close to 20% already for the last quarter. So we expect that going forward, our margins will remain healthy, and we will be significantly profitable as a company. And we also generate a ton of cash. So last year we generated some slightly under 500 crores cash from operations, and we know that we will generate in similar numbers in this year as well.
Right. Also, what business potential does Fractal Analytics see from healthcare industry? Could you shed some light on that?
So healthcare overall has grown very well for us. Healthcare overall as a share of the US economy is also growing. In fact, it is the one sector that is adding the maximum number of jobs. It is also the one sector that is going to benefit the most from usage of AI and driving better healthcare, better economics for everyone. So that is a place where we expect to see continued growth. We will continue to invest in our solutions and capabilities, in building more of those applications on Cogentic, as well as in client success and client relationship management.
Okay, point taken. And which industries is Fractal being most optimistic about when it comes to your future growth?
Certainly, healthcare we are very optimistic about the payer market as well as the life sciences market. We continue to do, CPG continues to be one of our largest, portfolios. So we expect that we will continue to do well over there as well.
And do you see any risks and red flags from AI? If such risk exists, how can they impact tech spends of firms globally?
Overall, tech as a percentage of revenue has been about 4.5% for the largest companies in the world. No major CEO in the world is looking at that and saying, hey, I need to reduce my tech spends. They're going to increase their tech spends. From 4.5, the number is going to go to 6. Traditionally, AI could address about 10% of the tech spend, which means that 10 into 4.5 means about roughly 0.5% of revenue was the overall pie that AI could address. Now that pie has exceeded to about a third of the total tech spends, which means that roughly 2% of world's revenue is the total tech spend available for AI, which means the opportunities are immense. Now that comes with an additional risk that AI compresses everything, which means that things that used to take a long time will take less time. Throughout the history of technology, tech has always been deflationary. So take that, multiply the two, you'll see that there's significant growth ahead of us, and therefore we don't see any major risks in terms of growth or in terms of profitability.
Okay, so that sounds optimistic going ahead. Thanks for that, Mr. Velankani, as well as Mr. Agrawal. On that note, we'll let you go, and thanks for your time once again. But viewers, with that, we're completely timed out on this edition of Market Fatafat. Thanks so much for tuning in, but stay on because closing trades takes all the action ahead.